Bitcoin's next bull run may not come from retail, not from meme traders, not from another wave of people buying $20 on an app. The real catalyst may be much bigger, much quieter, and much more powerful. It is the rise of digital credit. The biggest names in Bitcoin are saying the same thing. This cycle is not just about hype. It's about credit markets, corporate balance sheets, and government reserves, and institutional capital finally having a framework to move. Arthur Hayes is looking at something most people are missing. He's saying digital credit could offset the credit destruction coming from AI. His view is simple. Liquidity bottomed, Bitcoin bottomed, the chop is ending, and now the breakout phase begins. Yes, Hayes mentioned a year-end target around 125,000, but the number is not the real story. The real story is why he's bullish. Credit, liquidity, yield. Michael Saylor is pointing at the same machine from a different angle. There are roughly $3.5 trillion in private credit markets earning 9% yields, but much of it is illiquid, opaque, under-collateralized, and hard to price. Imagine even 1% moving into Bitcoin infrastructure. That is a structural capital flow. Bitcoin gives you scarcity. Fixed income gives you yield. Digital credit combines both. When Wall Street finds a liquid, scalable yield product, capital does not trickle in. It lines up. Then you have the corporate treasury angle. Tim Draper's argument is blunt. If a company has a large treasury and owns 0 Bitcoin, that may become irresponsible. Because cash is not neutral. Cash becomes a melting ice cube. Bitcoin becomes a hedge. Now here's the part that could shock the system. A strategic Bitcoin reserve. If a major government starts actively acquiring Bitcoin, every other country has to ask, how much? And regulation may actually become fuel. Clear rules allow firms to issue tokenized securities. They no longer have to guess. They can allocate. Paul Tudor Jones looks at Bitcoin as the strongest inflation hedge because it's finite. In a world of abundance, scarcity becomes the premium asset. Look at the pattern. Billionaires, companies, institutions, regulators, governments, this is a capital flow story. The next bull market may be driven by yield and sovereign positioning. I'm Marcus Demir. Track the flow, not the noise.